Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hi, everyone. Welcome to Top Stock Pick of the Week. I'm Neena Mishra. I will share my top stock pick, and then my colleague Ethan will share his very interesting stock pick. So my stock pick of the week today is Taiwan Semiconductor, ticker symbol TSM. And I believe this is one of the most important companies in the world, particularly for AI revolution. So let me share my screen and talk about TSMC. So TSM is the world's largest contract chip maker. It accounts for 60% of the global market share in chip manufacturing, and it is very important for the most advanced semiconductors. It accounts for about 90% of the world's most advanced semiconductors. All important companies in the world, including NVIDIA and Apple, are its largest clients. So the company reported excellent results recently. And then most recently, they reported very strong September quarter sales. They will be reporting their first full quarterly results this week on October 17th. The expectations are very high. So let's go to the quote page on Zacks.com. This is currently a Zacks rank number 2 buy-rated stock. And if we look at detailed estimates, you will see that expectations are very high. You will see the surge in quarterly revenue from 17.3 billion a year ago to 22.72 billion now. And earnings also, you see that earnings are going to go up from 1.29, the EPS 1.29 to 1.74. And because of the quarterly results that they reported last quarter, these expectations have been going up. And looking at the earnings surprise, you will see that the company continues to deliver positive surprises quarter after quarter. So that is why we expect another positive quarter for the upcoming earnings as well. Now, this slide is from their last quarterly release, and you will see that their share, if you look at the shares revenue by technology, chips that use 7 nanometer or below technology, they account for about 2/3 of TSMC's total revenues. And by platform, you will see that high performance computing now accounts for more than half, 52% of the revenue, and it is growing at the rate of 28%. These are the chips which are used in AI applications. So very impressive growth numbers over there. Now, if you look at the longer term price consensus and EPS surprise chart, you will see that the company has missed only once in the past 5 years. So very impressive record of beating estimates quarter after quarter. Now the stock is up about 90% year to date. But you will see that there's a lot of volatility because this company is based in Taiwan, and there is geopolitical risk because any invasion of Taiwan will severely disrupt the global chip supply. So that is why whenever there is any talk of China's threat to invade Taiwan, then the stock goes down. And that is why you see these periods of volatility. And then there were some comments by Trump as well that Taiwan should pay for its own security. At that time, also stock went down. So you should be aware of the risk, and you should also be aware that there are many opportunities to buy this stock on the dip. And whenever there is any such opportunity, investors should look to add to their position or initiate a new position in this stock. And also because of its rank number 2, the stock is worth a look, and I expect very strong earnings on the 17th. I'll now hand it over to Ethan for his interesting stock pick.
Thanks, Nina. And hello, everybody. I'm Ethan Feller, stock strategist at Zacks Investment Research, and my top stock pick of the week is Sezzle, ticker SEZL. So Sezzle is a financial technology company specializing in buy now, pay later, also known as BNPL, payment solutions. It was founded in 2016 and it's headquartered in Minneapolis, Minnesota. Sezzle allows consumers to split their online and in-store payments into interest-free installments, typically spread over 6 weeks. The service aims to make shopping more flexible for customers while increasing sales conversions for merchants. The company operates primarily in the US and Canada. They partner with thousands of merchants across various sectors, including fashion, electronics, and home goods. Sezzle has positioned itself as a competitor to other BNPL providers. More well-known ones are Afterpay, Klarna, and Affirm. Its business model revolves around charging merchants a fee for providing the service, while consumers can avoid interest and fees if payments are made on time. So they can also collect interest and fees if you don't pay on time. So with the rise of online shopping and new digital payment solutions, the BNPL vertical is expected to grow extremely fast over the next several years. Today, the buy now, pay later market is estimated at $14.5 billion. That's the size of the market. And it's expected to grow at a compound annual growth rate of 26.5%. So it's going to grow 26% annually through 2030. And by then, it'll be a $60 billion market. So yeah, Sezzle, it has a Zacks rank 1 top rating. So it's got upward trending earnings revisions. Analysts are upgrading the stock. The financial transaction services industry is in the top 34% of the industry rank. Also improving the near-term odds of a rally in the stock. Sezzle is a pretty small company. It's only got a $1 billion market cap. But as I'm about to show you, its stock has gone on a absolutely incredible run so far this year. So it's rallied from just $20 at the beginning of the year to $180 right now. And that is an over 800% gain. So it's pretty insane growth for the stock. But so I wouldn't share this stock if it was extremely expensive. If it was trading 100 times earnings or 50 times earnings. What's so appealing about Sezzle is that, as I'm going to show you, the company is continuing to grow like crazy, but it has a very reasonable valuation, especially for the growth and within the industry. So I think whereas a growthy momentum stock like this, has a big risk of the bottom falling out, because they usually have these super premium valuations. Sezzle is trading like a normal company, regular valuation, not super high. And we'll get into that. So I think it's great as a momentum stock, and it has that limited downside risk because of its very reasonable valuation. So before we get back to the Zacks data page, I want to just go through the most recent quarterly earnings report briefly. So yes, as I noted, the company is growing like crazy. At its most recent earnings, we saw that the subscriber count increased by 91,000 new subscribers for the quarter, year over year, to 462,000 total subscribers. And especially notable is that consumer engagement continues to grow very fast as well. And it's evidenced by the top 10% of consumers on the platform are transacting an average of 70 times per year using the platform. And just last quarter, that number was 53 times. So engagement is really growing fast at the company. The platform is sort of gamified. So I think that really plays into the increasing engagement with the platform. If you go on payment streaks, you get upgraded to, higher levels. There's loyalty tiers, there's benefits like giveaways, the longer you stay engaged. And yeah, there are also other new product potential for the platform. So financial technology companies, there's lots of different financial services that can be provided. They're all have little capital intensive, so they're not expensive to run, little CapEx to it, and they can be highly profitable. So they're also looking to add checking accounts in the future, cash advances, and credit building products. So there's a lot of options for Sezzle moving forward to add, products to their suite. So as we saw, this is the general growth metrics. We saw active subscribers are just exploding. In 2022, there was just 14,000 active subscribers. Last year, there was 168,000. And today there's almost 500,000, almost 500,000 subscribers to the platform. And that's, almost 300,000 increase over the year. So well more than 100% growth year over year. Also notable is throughout this whole time, even while it was a much smaller company, see repeat usage as a percentage of total users is above 9%. So people who use the app continue to use the app, which is very encouraging. The longer you can keep people on the platform, the longer they like using the services, repeat users are going to be the best way to grow profits. Quarterly purchase frequency is growing. We can see number of transactions grew almost 50% year over year to 5 million. And also the unique merchants that the shoppers use is over 200,000, which again has exploded higher. Again, this is kind of a unique platform because yes, there's the checkout option. We're all familiar with Klarna or Firm where you click it as you just check out, but you can use this at physical merchants as well. So it sort of stands on its own in that way. So yeah, these are the financial metrics over the last year. We can see revenue grew 60% year over year. It's just an incredible growth rate. Net income, you want to look, so we got 30 million net income, but you want to look at this one, the adjusted net income, because this number accounts for a one-time tax benefit payment, but still 13 million is extremely impressive for the quarter, which has gone from basically 0 to 13 million year over year. It's got very nice EBITDA margins, 32%. And something I'm going to note a little bit farther along is that the company has really strong financial discipline. Like a lot of these other buy now, pay later companies are growth at all costs, negative earnings, taking on more debt. It's a competitive landscape, but Sezzle sort of just does their own thing and they run a reasonable business. They're not just throwing money at this problem. They are cash flow positive. They don't have too much debt, and and they have this reasonable valuation thanks to it. So we'll get into that. And the last thing I wanted to show from this presentation is management is raising guidance. So I think they were really encouraged by this recent quarterly report. And so total revenue growth was originally 25% forecasted. They've raised that to 35 to 40% growth. Net income was originally forecasted to be 30 million. They've nearly doubled that to 55 million. Same $5 per share to almost $10 per share. So management is really excited as well. So they think there's a lot of big things coming for the company. So let's take a look at the snapshot page. So yeah, we can see obviously the stock price rocketed higher. Earnings estimates have also shot higher. And yeah, we can see because it's such a small stock, there's not a whole lot of analyst coverage on it. We got just 2 analysts currently. Kind of an advantage. Fewer eyeballs on a stock, fewer people looking at it. Especially with a stock this small, there's less institutional participation. But I think really a lot of this big appreciation here was probably some larger institutions getting involved. They're probably seeing exactly what we're looking at now. So yeah, the next year's earnings were upgraded in the last month. Earnings estimates have increased by 10.5%, which is a pretty significant margin, pretty significant increase. And yeah, so it's got upward trending on our visions. Let's take a quick look at the earnings and sales growth. Also notable, we can see the last earnings per share surprise was a big one. They beat earnings estimates by 158%. So yeah, the company continues to grow faster than people expect. So again, continue to grow like crazy. You got sales growth this year at 38%. Next year, sales are expected to continue to grow nicely, 31%. Earnings this year are expected to grow over 400% year over year. And then next year, again, expect to grow 50% annually year over year. So just huge growth, huge earnings growth, and got a lot going. So let's jump back here. I want to look at this data. So projected sales growth, as we saw, 38% annual growth. They've got big net margins, 21% margins. And this is what I think is really, really appealing about the stock. It has a forward earnings multiple of just 26.8 times. And the stock is up 800% year to date. And it still has an extremely reasonable earnings multiple, which is 26 times. So that really limits the downside. And, especially if earnings are growing 50% annually and the forward earnings multiple is 26, it's basically got a PEG ratio of 0.5. And if you look even farther forward, so if we look at next year's earnings, $10.10 per share, $180 stock, That means it's trading just 18 times next year's earnings. That is extremely cheap for a stock growing this fast. So again, it's really got a lot going for it. And lastly, I just quickly want to compare it to the industry leader, Affirm. Affirm, a much more recognizable name, much more people know about the stock. It too has a Zacks rank 1, so it's got upward trending zone revisions. It's considerably larger. It's almost a $15 billion stock, but I think Sezzle is a lot more appealing. I'm going to show you why. Again, it's got big earnings revisions here, pretty consistent. Analysts have raised estimates 28%, 43%, 141%, but you'll note earnings are negative, deeply negative. And maybe next year you get positive earnings, but it's a big difference when you have a company that's cash flow positive. Again, and they've got slower sales growth estimates, just 30% versus 38% for Sezzle. Obviously, net margins are negative. You can't calculate a forward earnings multiple on negative earnings. But if we look at price to sales, you can see it's trading 6.3 times forward sales, whereas Sezzle is 5.2. So it's cheaper on a forward sales multiple. And we can see the stock hasn't done very well year to date. It's down 4%, whereas Sezzle is up a crazy 775% year to date. So yeah, Sezzle is a cheaper company. It's got much stronger stock momentum. It's got a more reasonable valuation. It's profitable. Thanks everyone for watching. I hope you enjoyed it. If you want more information from Zacks, go to zacks.com/promo and sign up.